Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host, Joel Elkanen, along with Brianna Valesky, I guess tri-host, with Garrett Cook stepping up here in the interview with Kiana Danial, CEO of Invest Diva. Kiana, how you doing this morning?
I'm doing well. How are you?
We're doing good. We're doing good. Could you tell us a little bit about your book and your site, Invest Diva, and what people can expect from it?
Yep. So at Invest Diva, we aim to educate and empower women and beginners to trade and invest their money. I've been working for 4 years. I published a book, Invest Diva's Guide to Making Money in Forex. It was published in McGraw-Hill. So it's been great. And if you want to know how to trade, definitely come on over to Invest Diva. And if you want to get my daily signals, also they're free. You can come on over and even chat with me. So it's all good over there.
Okay. All right. Well, let's just go right to the U.S. dollar here, and then we'll talk about its comparisons to the other currencies here. I'm going to bring it up. U.S. dollar had the strong run, now pulling back a little bit. Is it just going to regain its footing to get, increase in value here, or is just another pause in the reversal of the trend?
Yeah, so what happened right now, the reason why you're seeing this reversal is because of disappointing retail sales that just came out. And so that wasn't where, that's why all U.S. dollar crosses suddenly went down, I think like as of 30 minutes ago. So that could be actually quite temporary from U.S. dollar perspective itself, because my point of view for U.S. dollar in the long run is definitely bullish, and I think we have seen enough of a rebound to see that coming. But for now, I mean, today we had a very big day globally for Forex, starting from the Asian session. So we had Chinese data out, we had British pound data out, and Bank of England Governor Carney spoke during the London session, and so all this has been creating quite a bit of fluctuation in the Forex markets today.
So, Kiana, let me ask you, do you think the moves that we're seeing now across the FX market are warranted? We had a whole bunch of GDP data coming out last night. I mean, you cited some of the data. We had Italian GDP, we had Euro area GDP, British unemployment, Greek GDP. The movements we're getting in the currencies now, do you think that these are going to hold up? Is this something that's legit, or are you going to look for any head fakes? I'm looking specifically at Euro CHF.
Okay, so looking at Euro has been enjoying the data. Well, it has been quite quiet, actually, relative to other currencies. The reason why is because of all the confusions with Greece, and Greece, how they had to draw money from their IMF holding account in order to meet the interest payments due to the IMF. So that is the reason why Euro is seeing less of a fluctuation. But technically speaking, and I'm looking at the Euro dollar chart right now, the Euro dollar, it seems that it actually has bottomed out, and it is now testing a 23% Fibonacci level. So I would say that I'm still waiting and seeing, because I'm still not quite, I was actually seeing Euro going to parity. Like 2 weeks ago, I was quite sure it's going to go down to parity. But right now, technically speaking, it's testing a very important resistance level. And I would say that a break above it could actually mean an overall recovery for Euro in the long run.
So then further from, with the euro being flat and with all the worries we have there and with the dollar strength over here, are there any more esoteric ones that individuals can look at? Mexican pesos, anything else? Do you deal with any sort of esoteric currencies that maybe aren't,
No, actually, I don't
pairs?
trade the exotics, and I have my own reasons for that. You can find it in my on Invest Diva. I mainly actually trade the majors, and the things that I'm looking at right now today, I'm looking at British pound versus the U.S. dollar, and it is enjoying quite a lot of push forward after the UK elections. It has been on an uptrend. It has been crossing over all resistance levels, and it is actually approaching the 1.58 level on the pound dollar. Another currency pair that I have been following has been the Aussie dollar. And so the Aussie dollar also seems like, well, of course, we'll have some bad short-term reviews of the U.S. dollar that is dragging the Aussie dollar pair higher up. But in Australia itself also, it seems that Australia is taking Chinese bad data positively, and they think that is going to help their trading, and that is the reason why the Aussie dollar is going up.
So the British. Oops, sorry. No, I apologize, Kenneth. Please finish.
No. Please, you had a question about British pound.
Yeah, well, the pound dollar. I'm looking at the chart right now, and it's been a nice run up at least since the first 3 weeks of April. Up to this point. Do you see it running back up into that 162? 5 range, 1.625. Is that going to be something that's going to be achievable given this projection that we've had since April?
It is achievable, yes. I mean, looking at the technicals and looking at the thing is, Governor Carney actually right now, like 3 or 4 hours ago, came out and they said that Bank of England is not in a rush to cut interest rates, and they actually cut their estimate for growth in the UK this year to 2.5%. From 2.9%. So it is interesting that people are still taking this news as good, and the British pound is still going up. Overall, my next target for British pound versus the U.S. dollar for now, it seems pretty easy that it's going to reach 1.58 or 1.59. 1.62, I would be a little bit hesitant to have it that high up because. As you mentioned, you see the pair has been on a back-to-back bullish move since the elections, and there is a possibility that we see a rebound, a correction, and then it could go back up. But 162, I still don't see it coming. 158, yes.
Okay, Kiana, I guess, the elephant in the room is the Fed, right? And what is going to happen with interest rates? Looking at the TLT here, which is a proxy for the bond market, just been killing it. I mean, there is a group of institutions, group of traders, just convinced that the Fed's going to make a move here. Looking at the TLT here, kind of looking at the way the 30-year bonds trading. What are these investors or institutions seeing that we're not?
So yeah, interest rates you're talking about. So we are going to see a rate cut in the near future, at some point. I mean, the Fed they removed the word patient from their this latest meeting, and you could see it coming up at some point, but 2015, later 2015, early 2016, we still don't know.
Okay, and what? Just based on what you're seeing, in the bond market and the TLT and stuff, it just people just liquidating this long run up in the bond market. So you think it's going to be September, December, or you think they're going to push it all the way off to 216 based on the data we're seeing?
From the data that we're seeing, I would actually say it will be pushed over to 216. Everything is going pretty slow with these people, so.
Yeah. Also, the data that's coming out. So, what out of all the currencies that you're trading, what do you like? Do you have a favorite, or what's your most profitable one?
So my most profitable one is something that American people actually don't really care about. I am quite a bit of favor in New Zealand dollar, and so it's pretty productive, and it does follow. The U.S. market pretty, nicely. It fits into everything. So that has been my most profitable. The next in line has been Aussie dollar and then the Japanese yen. So these have been, because I think the reason why euro, dollar, and pound, they're pretty volatile. They're great. But as for a long-term trader, if you're a long-term trader, I would recommend these currency pairs as opposed to euro and pound. The euro and pound, they do have their benefits. The advantages of them are, namely, the commission fee that you pay for trading these currencies are generally lower, especially for short-term traders. But for a long-term trader, I would definitely recommend the three: New Zealand dollar, Aussie dollar, and Japanese yen.
Did you get down and dirty in the Swiss franc there back in
I
January?
did. I lost money. Because it is interesting because I had set because of the ceiling that they had for the Swiss franc, right? Is that's what you asked, right?
Yeah. Oh yeah. Yeah.
Okay.
Definitely.
Yeah, I was like, did I hear it correctly? Yeah. So I had like long ago, 2 years ago, set a very long order for Swiss franc versus the euro at 120 was, and because of the ceiling, I was like, all right, if it reaches that level, it's going to bounce back up, and I'm going to make money. So guess what? It suddenly dropped, and I had completely forgotten about that position because I had like set it for whenever it happens, 2 years ago, a very long-term position. So I wake up in the morning, I'm like, what? This doesn't seem right. What is my account like this? And I read the news. I'm like, oh, right, great, a job owned. And so I did get affected by it, but it wasn't that bad. I had my stop limit, fortunately, order in place, so I was cut out pretty like shortly after. Like, no, I didn't catch the whole down run. I caught like I guess 100 pips or something. It was down 100 pips. So
Wow.
yeah, these
I
things
mean,
happen.
yeah, they do happen. And just just looking at the chart here, I have the daily up. It. I mean, that was the greatest fade there when the Swiss bank made that move. It came back. Kind of interestingly, it came back down nearly to the level that it was at before they made the surprise announcement. Now it's kind of chugged back. Let me ask you about the Canadian dollar here. Think it's recovering here a little bit. Canadian economy very dependent on oil prices here. Oil prices
Oh
have
yeah.
have moved up. Just comment on the Canadian dollar, and then we'll talk a little oil.
Yeah, so Canadian dollar, let me pull up the chart. So the Canadian dollar actually seems like it has been range trading after the oil prices went up to 40%, and it has been great. But let's actually do talk about oil, because not only
Okay.
Canadian dollar but US dollar is very, very correlated with oil prices. So we have seen the rebound of 40% from 6 year low. And the thing that you have to keep in mind is that this is probably not here to stay unless demand accelerates, right? The rally could really be in danger. And I have actually had a complete report on oil prices and how we can see what we can expect in all the way into 2016. So ecological barrier would be for now $100 a barrel, and that is like long all the way to 2025, right? But so right now, with the rally that we've been seeing, the U.S. oil producers are rushing to take advantage of the rebound, and they're locking in prices for next year and beyond, safeguarding future supplies, and they're trying to possibly even pave the way for a rebound in production. But you were asking about commodity futures, and so commodity futures and trading commission data show that they're supporting the idea that they have been actually skeptical about a sustained price and rally in oil. So we could see again a rebound in oil prices. It has a reversely correlated relationship with U.S. dollar. So when you see the oil prices go up, you see the U.S. dollar go down, and that is exactly what we've been seeing right now. The reason why I'm bullish on the U.S. dollar in the long run is because we see that the oil prices are gonna move back down to the previous levels, and therefore the Canadian dollar could also trading versus the U.S. dollar, right? So the U.S. dollar versus the Canadian dollar, because that's the pair, how the pair comes up. We can see more up moves in the Canadian in dollar CAD pair moving forward.
Oh, question here coming out of the chat room. Which currencies trade the best according to Fibonacci levels?
Fibonacci levels, so that is an interesting question, but the fact is that the Fibonacci level only gives you psychological barriers of all traders. And I have seen Fibonacci level working very well with all major currencies, all US dollar crosses.
Okay, all right. We've been on the line with Kiana Danial. She's the CEO of Invest Diva. You can check out her book, Invest Diva's Guide to Making Money in Forex. Thanks a lot, Kiana. Good luck at the currency markets, and looking forward to talking to you again soon.
Thank you. Have a wonderful day.